Good morning, everybody. Welcome back to Morning Markets on Tuesday, the 16th of June, the 100th episode of Morning Markets. And I'll come on and reflect on those 100 days of Morning Markets in a couple of minutes' time. But first, I just wanted to touch on what's been happening in asset markets over the past 24 hours, what we've been discussing as a team. And I think one of the things that we touched on this morning is just how sentiment and the importance of sentiment, as we've discussed in Morning Markets in previous episodes. But what did we see yesterday? We saw sentiment improve through the course of the day. That was evidenced by equity markets in Europe, the UK, opening at their lows and then trading better through the course of the day, such that the Euro stocks closed down 60 basis points, very much similar to what happened with the FTSE 100. In the US, we had a positive day with the Dow, Nasdaq and S&P 500 all closing in positive territory, and indeed the Nasdaq up 1.4 and the S&P up 80 basis points. The US market was trending positively and then was supported further by the announcement of the Fed that they would be expanding or changing how they're using their corporate bond program and moving away from the ETFs, but also alongside ETFs targeting particular issuance, i.e. buying bonds in the market in a portfolio approach as they describe it. I must admit I'm a little bit surprised that the Fed made this announcement yesterday. I think as we've been touching on in these discussions over the past number of weeks, we've seen the corporate bond, the investment grade bond market improve quite materially over the past number of weeks. Issuance has returned. The premium required to get issuance away has declined. If anything, it's returned to a normal situation. And then yields and spreads in particular, spreads over treasuries have come down quite materially from where they got to at the height of the market turmoil towards the middle to end of March. So quite a significant change in the bond market dynamics, particularly for investment grade. So surprising that we've seen this action. We might get some more detail around the decision process today when Jerome Powell speaks at the Senate Banking Committee. So we'll watch that and see, and that again may introduce some volatility into the market. Overnight in Asia, we've seen a good performance from equity markets. Some of that seems to be giving credence to what the Bank of Japan have discussed, whilst they didn't make any change to policy and negative rates and their version of yield curve control. They did expand the corporate lending facility that they do have, and that's expanded to 110 trillion yen from 75 trillion yen. So that takes that program up to $1 trillion. If we look at just other asset markets over the past 24 hours, what can we observe? We've seen the dollar weaken against a trade-weighted basis of its major trading partners. Again, that just is a continuation of the trend that we've been discussing over the past number of weeks that was interrupted for a number of days last week. In the bond markets, we've seen a positive move in investment grade given the announcement from the Fed last night. Other things then that we've been discussing is just the ongoing reopening of economies, and then just touching on, as we did yesterday, looking at how COVID-19 is evolving in markets and economies in particular as they reopen. Turning then to Morning Markets, the 100th edition today. When we set out to do this, we wanted to provide you, our clients, our advisors, with some insights into what we as a team are finding interesting, but also to provide you with information that we hope you found useful and has helped navigate through markets. Never did we think when we launched this that we would be entering one of the most interesting phases in markets in the past 10 years, but maybe in the past 50, 60, 70 years as well. So a very historic time within what's happening in asset markets, and something that we've tried to convey to our advisors, to our clients through these podcasts. But just looking back at 100 days, what 100 days it's been, from mid-February, where we'd seen equity markets at all-time highs, to where we were just a mere month later, and we'd seen one of the steepest and fastest bear markets in history, with equity markets falling over 30% in a very short period of time, indeed a matter of days. And then just fast forward, a very significant rally. So one of the steepest declines and then one of the strongest rallies that we've seen in a historical situation. We've also observed negative oil prices, something that I don't think any of us have seen in the past. And then we've seen very significant fiscal and monetary support from governments and from central banks. Indeed, if we look at the central bank balance sheets, we see a near vertical expansion in those over the past number of weeks. What else have we seen? We've seen volatility spike to levels that were beyond that of the financial crisis in 2008, 2009. And we've also seen cross-asset correlations approach 1 at certain points in the depths of the March market environment, where there was definitely a rush to liquidity and to dollar liquidity at that point in time. What has it taught us? What has it made us think about more? Certainly made us think about diversification and the role that multi-asset portfolios play in allowing clients to achieve their goals. And that leads on to the second point, that setting a goal, setting a target is really, really important. Why? Because it allows you to navigate through periods of market stress and market volatility. Focusing on achieving that target is crucial. It removes or mitigates the want to focus on the market and what the market is doing. Is it time to buy? Is it time to sell? Well, focusing on our long-term goals helps mitigate that. What is ultimately, I suppose, a rational response to the market environment at that point in time. But that again speaks to what we really believe in and believe strongly in at True Potential, the role of diversification and the role of multi-asset portfolios in allowing clients to achieve their investment goals. I wonder what the next 100 days will bring, and we'll be discussing when we're looking back over 200 episodes of Morning Markets. Thank you again for watching, and I hope you found Morning Markets useful and the approach that we're taking is helping you navigate through markets at this point in time. Thank you.